preventing financial institutions from taking excessive risks.
On Wall Street, shares in the banking sector fell following the announcement. Mr. Obama said he wants to control the behaviour which has led to the taxpayer being held hostage by Wall Street.
Will no longer be allowed to own, invest or sponsor hedge funds, private equity funds or proprietary trading operations for their own profit, unrelated to serving their customers. If financial firms want to trade for profit, that's something they're free to do. Indeed, doing so responsibly is a good thing for the markets and the economy. But these firms should not be allowed to run these hedge funds and private equities funds while running a bank backed by the American people.
Well, the President went on to say that there would be a halt to any more consolidation on Wall Street because of the effect he believes it's having on competition and consumer choice.
There has long been a deposit cap in place to guard against too much risk being concentrated in a single bank. The same principle should apply to wider forms of funding employed by large financial institutions in today's economy. The American people will not be served by a financial system that comprises just a few massive firms. That's not good for consumers. It's not good for the economy.
The President Obama there. Well, for more, let's speak to our business presenter, Dominic Laurie. So let's be clear on this, Dominic. What they're doing is making it clear, these proposals are making it clear, that if you're a bank, you can't have a consumer arm and an investment arm in the same operation.
You can have an investment arm as long as you're not profiting on it for your own gain. What you can have is you can be a bank and you can trade in hedge funds, you can run private equity divisions, you can do proprietary you can't do proprietary trading, but you can trade as long as it's for the benefit of your clients. What you can't do is carry out these things for your own profit. So it's not going quite as far as breaking up consumer banking and investment banking in the way that happened in the 1930s in the States, but it's going kind of half that way. It's what President Obama's saying: if you want to take these risks, please do so. Do wade into that market, but you can't put savings at risk.
But the very reason that, as you mentioned, the 1930s, after the Wall Street crash, that they separated these two functions within a bank was to stop a Wall Street crash. Some people might say, well, didn't we learn anything? And how come that legislation was rolled back following that?
Indeed, this legislation was rolled back in 1999, right at the end of the Clinton era. And since then, some larger US banks, for example, like Citigroup, they began to merge investment banking divisions and consumer banking divisions. If you look at here in the UK, actually, our biggest banks have been doing this for years. Look at RBS, look at Barclays. These are banks which have large consumer divisions. We see their branches on the high street. We trust our savings with them. But also but they also have investment banking. They do this proprietary trading where they buy and sell shares for their own profit, and as we've seen recently, often for their own loss.
Indeed. Okay, Dominic, we'll leave it there. Thank you.
Well, let's get the political reaction here now. We can speak to Ben Wright, who's at Westminster for us. And Ben, George Osborne, the Shadow Chancellor, very quick to make his points on this.
Yes, the Tories want to portray themselves as very much in step with the sort of thinking that is happening on the other side of the Atlantic. They say in policy papers they've had out for 12 months or so now that they have been explicit about the desirability of separating the much more risky part of a bank's operation from the more humdrum retail side. It's something they proposed last year, and today they're saying, look, we would very much like to do it again now. We're very much on the same page as President Obama. A caveat, though, that they have always had is that if it's going to happen, it has to be within an international context. There has to be a G20 agreement that makes sure that every country is pursuing the same sort of strategy. Otherwise, it is unworkable. But they are certainly wanting to claim, I think, some political credit for following the sort of policies that seem to be emerging from Washington today. They're not committing to breaking up the banks explicitly, like it seems to be happening now in Washington, but they're certainly trying to say that they're on the same page. The Lib Dems too, Vince Cable today has restated the Lib Dems policy that they think this is absolutely essential to diminishing risk in the banking sector.
And has there been any reaction at all from any government sources?
Yes, well, I've spoken to the Treasury. They welcome the announcement from President Obama, and like the other two parties, say that it's very much thinking about diminishing risk in banking, that it's in step with the sort of measures that are going through Parliament at the moment in the banking bill. So they say there is a high degree of commonality. I mean, the government certainly don't want to lose the status that they've tried to build up over recent months, that they have been at the forefront of international efforts to reduce risky banking, but they haven't said all the last few months that they would do this sort of thing, that they would separate the much riskier part of banking, the hedge fund operation, all that sort of stuff from the retail. They don't think it's something that is necessarily very applicable to British banks, where they don't think it's as complex and as interwoven as some of the American big banks. They just don't think it's as much of a feature here. They think there are other things that should be done here to diminish risk that it is pursuing. So there is a political disagreement about whether breaking up the banks crudely like this is the right course of action. But they welcome the Obama announcements.
Okay. Ben, thanks very much.
All this, what's been the reaction?
Well, the reaction has been negative. Not hysterical, but solidly negative, with the Dow Jones Industrial Average falling more than 200 points, which is about 2%, pretty much right from the opening, because news had come out that this was expected, the announcement mid-morning here in the U.S. And the big bank stocks like the Goldman Sachs and J.P. Morgan Chase, those have been down about 5% most of the day. Interestingly, some of the smaller regional banks, which wouldn't be affected by these restrictions because they don't have investment banking activities, they've actually rallied a bit in the same trading session.
We know that it's open season on bankers at the moment, and the White House has made it clear that this is not designed to be punitive, but to ensure trust in the financial system. Are there any voices out there saying this is a ridiculous thing to do? We need to continue the way we've been operating before?
There certainly are, yes. In fact, someone from the Financial Services Roundtable was saying that the idea of forcing the banks to break apart some of their activities was actually more risky and could lead to less competition in the marketplace. And a lot of people in the markets here have also said it just isn't really clear. This is more of a philosophy that's been put forward without clear rules, which of course would have to be worked out by Congress. So that's one thing. And then it's just such a major task that some people have said it's akin to taking on big tobacco like the Clinton administration did.
Sure, it is a big thing that the White House is taking on. What do you think are the chances of this getting through Congress?
Well, they're slightly less than they were a few days ago because the Democrats lost a seat in the Senate. They now don't have the filibuster-proof majority with 60 votes against 40, since there are now 41 Republican votes. And the elections that will happen in the autumn for Congress, the lower house of representatives, most people expect the Democrats to lose seats there. So unless something's done rather quickly in the next few weeks and months, it does seem that the chances would start to decrease as the months go by.
Okay, Karen, we'll leave it there. It's good to talk to you. Thanks very much.